Hi, everybody. Welcome to NJ Thrive Small Business Webinars. Today is Thursday, January 4th, and you are attending one of our weekly webinars created to help New Jersey small business owners start, grow, and thrive. Thank you for being here today. Thank you for your support. We always appreciate it. Um, we are America's New Jersey Small Business Development Centers Network. That is what NJSBC stands for. And the network is a statewide program powered by the SBA, Small Business Administration, and partners to help small businesses in New Jersey with three main things. And those things are no cost small business consulting, training and events starting at $0, just like this one that you're attending, and exclusive small business resources. If you look on the map of New Jersey on the right, you'll see little SBDC logos, and that's where our physical regional centers are located. And there are about 10 to 11 regional centers that we have at the moment. So if you'd like to attend in person, you can go to njsbc.com and find out where the exact locations are. If you are new here, then welcome. If you have been attending our webinars, then you know the drill, you know what we like to do. Please go in the chat, let us know where you're from, who you are, what you do, what your small business is about, any contact information you'd like to share to network during the webinar. And you never know, you might find your supporter, investor, cheerleader, business partner. So that's always exciting. So feel free to do that in the chat below. We do have an agenda for today. And on the agenda, we have a couple of headlines, and those are just some news articles or any updates that we like to share with our small business community. And excuse me, we have our presentation. It's not exactly a presentation today. It's a little different, you'll see. And then we'll have our Q&A either during or after. So stay tuned. And these are our headlines. So let me just walk you through them. And the first headline is actually a PDF. It's shared by nj.gov. So if you're a small business, this is very relevant to you. New Jersey's minimum wage went in effect January 1st, 2024. So this is something that definitely applies to everybody in New Jersey. And if all the links that I'll be showing will be shared in the chat, so you'll be able to look at it, for more time. I'm just sharing them briefly here. The second is a article from NJBIA, New Jersey Business and Industry Association. Grants available for small businesses. This was published just 2 days ago. They're accepting applications in 2024 for several different grant programs that remain available. Their Small Business Improvement Grant offers up to 50% of reimbursement to small businesses with making improvements or purchasing new furniture, fixtures, and equipment up to $50,000. Then there's the Small Business Lease Grants, Small Business E-commerce Support Program. All the information can be found on this article, and you will have the link in the chat below. The third is from America Seed Fund, SBIR-STR. This is related to any tech companies that we may have. So they're doing a road tour, which is a national outreach effort to connect innovators and entrepreneurs for SBIR and STTR programs. They're known as America Seed Fund. This is where they're announcing their road tour, and they had a virtual tour as well as in person. These are all the dates that they're having, South, Southeast, Great Lakes. So if you're interested, or if you're located in one of those areas, that's definitely helpful. All right, so those were our headlines. Some things to keep in mind. If you have any questions, please put them in the Q&A box right alongside to the chat box. There are no slides, no webinar resources today, so you don't have to complete the survey, but we'd appreciate it if you would. to give us feedback on our speakers, on our presenters, and you know, if any topics that you'd like for us to do a webinar on moving forward. All right, so what's the topic for today? The future of commercial lending, what businesses need in 2024. That's with Ryan Silvestre and two of our special guests. Ryan, the stage is yours. I'll stop sharing and turn off my audio and video.
Well, mucho thank yous. I appreciate that. And like Uzma mentioned, today's a little bit different. In the spirit of risk mitigation to make sure that our businesses are properly aware of what's happening in the business landscape, particularly in the lending field, and how to be a bit more risk adverse and how to plan forward for 2024 to get the most out of what's being offered by banking in general. Today we're going to have a discussion, and the discussion really is going to be about what happened wrapping up 2023 and what's happening that we think might happen in 2024, and then some good common business practices that will help us be better situated to have that conversation with the banker. So today I invited two perhaps some of the brightest minds that I've met in banking and that I've been working with both for several years. I have Fernando from UCEDC and Carlos from M&T Bank. So I'll give them a moment to introduce themselves, and then we'll kind of get right into what the topic is. So Fernando, I appreciate you accepting the invitation. So it's very appreciated. And thank you for joining us. Can you give us a little bit of a background on who you are and yeah, just a little bit about who you are.
Sure. Well, thanks for having me, and thank you to SBDC. You guys do great work throughout the state of New Jersey, and obviously we partner up on a regular basis. My background is, I hate to admit it, but it's been a while. I've been in financial services, and actually I started in international trade well over 25 years ago, doing mostly business between North and South Latin America. Moved into financial services, banking, commercial banking, migrated to investments, wealth management, planning, migrated from there to private debt, raised private capital for some clients in Latin America. And then I got involved with United Counties Economic Development Corporation under advisory board, diversity board a few years ago. And finally, I joined their staff about right after the pandemic. I love the mission. Our goal really is to work with businesses in New Jersey, primarily in underserved communities, but not totally, that perhaps may have limited access to capital, or businesses that perhaps may be just too new or need a little bit of an extra boost in getting capital for their businesses. Most of our funding comes from the SBA, so we're basically an SBA lender. We also get funded by NJEDA and other organizations that fund UCEDC, and we in turn around and put that money to work. In some cases, we partner very closely with county organizations like Hudson County Economic Development Corp. We've been running a program for Mercer County where they actually provided some funds from the Recovery Act, and we're managing a 0%. Actually, that funding was just recently used up, but we ran a 0% loan program for Mercer County. So there's a lot of moving parts, but there are a lot of New Jersey economic development tools out there, and I encourage everyone on this call to be aware that there are resources for small businesses in New Jersey.
Yeah, UCDC is perhaps one of my little secret weapons that I've been using for years. They have a very unique fit, I guess, in the toolbox for businesses. And depending on the situation that the small business is in, UC-EDC could provide a great bridge to get themselves to become a bit more traditionally bankable, and to help them grow, especially when they are just shy of acquiring the more traditional, forms of debt.
Yeah, I
So
mean,
EDC, yeah.
our goal really is to take a client that may not be ready for banking quite yet for a bank
Exactly.
loan,
Mm-hmm.
get them ready, maybe make a loan, and eventually the bank will take that client back, maybe refinance, and we can redo it all over again. So our partnerships with banks throughout New Jersey is key to everything that we do. It
Exactly.
really is.
And that's a nice little segue because, Fernando's the bridge, and on the other side of that bridge is Carlos. And so Carlos represents M&T Bank, and I've been working with Carlos for many years now. So Carlos, can you give us a little bit of introduction on who you are and who M&T is?
Sure, sure. Thank you. And thank you, Ryan, for inviting me to this podcast today and discussion. I know we've met, we were talking about this yesterday. We met back in 2010, right? So it's been
Yeah.
almost 14 years.
Yeah.
I've actually, for those who don't know me, I've been in the industry now, in banking industry for about 20 years. Started my career as a teller at Commerce Bank years back. Most recently I'm with M&T Bank. Started business banking, commercial banking back in 2010, around the time that I met Ryan. And again, we've stayed in touch throughout the years. But I work for various banks, some of the larger banks here in the nation. Again, most recently with M&T Bank for about 2 years. What I do love about M&T Bank, and I say this because I work for other banks and have the experience, is that we're a larger bank. We're considered a super regional bank, about 200 billion in assets total, which is small compared to some of the larger banks. But what really differentiates us is our focus of being local in the community. The bank, as some of you may have seen, M&T doesn't market much. We are, as the employees, are out there marketing ourselves. They pay us to do the marketing, which allows us to be very custom with our approach, right? Having these discussions, being part of the SBDC, speaking to small business owners, being out there networking, prospecting with our local community is what really differentiates ourselves. And we are able to be very custom, right? Are we the cheapest bank around? Probably not, but we do get stuff done for our clients. We're able to structure things very uniquely compared to some of the other banks. I know Fernando works with UC-EDC. We just did a deal in partnership with the UC-EDC for a used car dealership in Trenton. So we primarily focus on conventional financing, which is your typical working capital lines of credits for your business, equipment financing, term lending, maybe it's lease improvements. We also focus on commercial real estate owner occupied. And typically the business size that we work with are startup businesses, right, in partnership with the SBA, with up to businesses maybe in $50 million in revenue, right? So in addition to the financing piece, I also manage the banking piece with our team here in Paramus, New Jersey. So we handle all treasury management needs and day-to-day banking. And ultimately, I pride myself in being a trusted advisor to our clients and helping them with their day-to-day banking needs. I do handle specifically the business side, but I do have partners here that will work on the wealth management side, work on the personal side, the mortgage, consumer lending. So we have access to a whole group of individuals that could service, our business clients on a whole level. So typically, we'll bring the bank to the client. That's what I say. So after I meet a client or have a discussion, I'm introducing our partners. And at the end of the day, we want to make sure that it's not about the banking, right? Every bank offers similar services, how we're adding value and servicing our clients, really getting to know your business, understanding your business, and how we could help you grow in the near future. But again, excited to be here today, and hopefully everyone on the call gets some useful information on this, and looking forward to it.
I appreciate that. Thank you. And for those of you that have joined us in the past, usually there is, like Uzma mentioned, a presentation. But I think today, we can get the most value by having an actual conversation. So it's going to be a little bit different than before. So we'll spend the first half of our time going over just what we're looking at, what we're seeing. Again, like I mentioned before, 2023, and then wrapping up 2023, and then going forward to 2024. So you guys have a good foundation to stand on. There's a quote that I think of that reminds me of what our topic is today, that failing to prepare is, pretty much guaranteeing that you're going to prepare to fail, and that's kind of the idea here. What's happening, and especially in the last couple of years when we saw the pandemic and rates, were really low and people were borrowing. But now anybody who has an adjustable rate mortgage or an adjustable rate loan, a line of credit, and they're seeing that those rates have been going up and up and up, what does that mean for my cost of capital? What does that mean for my bottom line, my profit? And that's kind of that's something that I really wanted to start off by addressing. I recently was working on a package where I had to give somebody a heads up that their loan might be in the low double digits, in the 10-11% range. And does it make sense for me to borrow money at that time? I mean, at that rate? And sometimes the answer is still yes. I just need to make sure that I can go back to my financials, and run through the cycle of what does that cash flow or cost of capital look like, and what does the impact on my bottom line look like? Do I still have the margin for me to take advantage of that loan? Just because I have access to the money doesn't mean that I always should take the money, and what kind of money am I taking? There's different types of loans out there, which I'm definitely going to go into a little bit. But we want to kind of make sure that whatever kind of capital we're getting matches the asset class. Long-term debt, should match long-term assets and vice versa. So that's kind of what I want to kind of go into. But before I release any of our opinions, I want to make sure that I double down on our platform. Our purpose here is education, and it's our own opinions. So it doesn't reflect the opinions of the groups that we represent, but the idea is, hey, these are talking points that you guys should then take to your trusted advisors, your accountants, your attorneys, do your own due diligence, do your own research, even come back to us and gather all the information so that you guys can prepare, with better quality information. You can have better quality decisions that you can make, at the end of the day. So right now, one of the macro views that I want to start off, I want to always start off with a big picture, and since we're talking about rates, from a small business perspective, what rate should I be looking at, and does the bank use that rate? So a lot of times when I talk to people, we hear, the Wall Street Prime, Wall Street Journal prime rate is this number. Does that mean that's the rate that I'm paying? And what rates should I be looking at? But yeah, I'll start off, I guess, with Fernando. So in the world of I guess of interest rates specifically, we saw the rates kind of go up a lot throughout 2023. What rate is the rate that banks are using, and is there a change from what happened in 2023 going to 2024 as far as what the peg rate is going to be, and what is the peg rate?
So in the world that we live in, which is, domestic in New Jersey, let's say, most local lenders are going to be working off prime rate, right? If it's a variable rate, it's going to be prime plus anywhere from 1 to 4 or 5. Most bank lenders that I've seen on the deals that we've participated in with them are going to be somewhere between prime plus 1 to prime plus 2 3/4, maybe prime plus 3, which, compared to couple of years ago where people were getting money at, when EIDL came out, that was 3.75% money. And businesses need to realize that sometimes managing a business with debt and not paying attention to what that really means, they're putting themselves perhaps in a real difficult situation, like you mentioned, because that's my profit margin, right? So if my profit margin is 20%, 25% a year, right? And if 12%, 15% of that is going to be going to interest only, I really got to pay attention to what my business is doing. What cheap money did, and what was, it covered up a lot of issues for businesses in the past, right? It was easy to get cheap money. They could cover it. And business owners took their eye off the ball a little bit. And we're typically managing for the top line, which is gross revenue, rather than focusing on expenses and the bottom line. In a business, it doesn't really matter what size you are. You could be, Apple, or you could be the coffee shop down the street. If you're not managing for profit, you're managing your way out of business. It's just how it is. It's simple math, right? And as far as what do I see, I think the first 6 months will be very much like the last quarter in 2023. I don't see rates going up any higher based on what I'm seeing. They'll stay where they are. So right now, for the SBA 7A program, if you're a startup business, you can expect to be paying prime plus 3. So you're looking at 11.5% rate. That's just what it is. And then it'll come down from here, longer in business, stronger, business plan, and stronger historicals. There are also microloan programs that we have that are for loans below $50,000. Those are actually below 8%. But again, those are driven more towards the mom and pop storefront type businesses. And again, the loan has to make sense for the business. To answer the final question, I think there will be a possibility that rates will start to come down, maybe starting in June, as long as inflation continues to drop, right? The Fed has targeted 2% inflation. If they feel that they're getting close to that, you might see a rate drop sometime around June. I hope that kind of answers your question. I don't want to take too much away from Carlos, because I'm sure he's got a lot to add to this as well.
Exactly. Carlos, so are you also looking primarily at the prime rate? And is there another rate that small businesses should be mindful of?
Sure. And, that's a good question, right? And to Fernando's point, I'll start by saying exactly that, right? Profitability, making sure your business is running profitable is top of mind, right? Because at the end of the day, your goal is to be profitable, right? To make sure your business is doing well, you're providing for your family, you're providing for your employees, et cetera. So to answer the question in terms of what rate we're using, most banks, to Fernando's point, use, depending on the type of loan, right? So usually on a like a line of credit or a variable loan, most banks are using the Wall Street Journal Prime, right? And all these benchmarks, which I'll mention, I'm not going to get into too much detail, I'm just going to go high level overview. All these benchmarks, what it pretty much means is what is the cost of the bank to borrow, right? Fernando mentioned the spread, and that's absolutely correct. So some banks will charge 1 to 2 or 3% spread. What that means is that that's what the bank is charging on top of that benchmark, whether it be the Wall Street Prime or some of these that I'll discuss in a second. And that's pretty much the profitability to the bank, in essence, with the cost of them lending you this money, because there's costs involved with obviously the bank lending money, right? There's administrative costs, there's cost everyday business. But yeah, so the prime rate, as Fernando mentioned, 3.5% a couple of years ago. Now we're close to 8.5%. The good thing about it for those who are in a prime rate, or a fixed variable loan, is that if rates do go down, so will your loan payments go down, right? Your rate will go down, therefore your interest only payments will go down. But you never want to be in a situation, as discussed before, where you're just paying interest only, right? When you have a line of credit, whether it be 100,000 line of credit, 25,000 line of credit, you want to make sure you're paying that interest. The bank is only going to charge you interest only, the same way you pay on a personal credit card, right? So you want to pay down the interest, and you also want to pay down additional principal. I advise our clients to pay it fully if they could. So the LIBOR is a benchmark that most banks will use on variable rate loans. We do have a lot of 7A SBA loans that are off of the Wall Street Prime as well. Some of them are fixed at the Wall Street Prime, or some of them are variable. Another benchmark some of you may have been familiar with is referenced as the LIBOR rate, which stands for London Interbank Offering Rate. Prior to Prime, a lot of banks were using the LIBOR rate as a benchmark to borrow money. They usually have a 1 month or 2 month or 3 month LIBOR rate. And same situation, they'll have a spread above that rate that is charged, that accumulates your total rate pretty much, right? So let's say LIBOR was 3% plus a spread of 1. So back then your rate would have been 4%. The Fed, and various countries decided that, what, this benchmark, it was pretty much considered a global rate benchmark that countries would use. And they say, hey, listen, you know what, this rate is not measurable. So they've decided not to, as of June 2022, not to use this rate. So the U.S. is no longer using the LIBOR rate because they wanted something that was more measurable and ultimately to monitor costs, right, and efficiencies. What was created is the SOFR rate, which is SOFR, which stands for Secured Overnight Financing Rate. So it's a broad measure of the cost to borrow money overnight, and it's on a daily basis, right? So they can monitor more so what's happening on a daily basis, and for what it costs the banks to borrow. So again, that's the most I'll get into the details of it. But some banks are using SOFR now, and I'll be glad to answer any questions after. And that's more so for variable rate loans. You have your lines of credits that banks offer but on the fixed side, and I'll end with this, for term lending, whether you're getting a mortgage or let's say you're buying a piece of equipment or you're purchasing a business outright, or you're purchasing a partner out, a lot of the banks, they use a term loan for this, right? Because you want to make sure you're not paying interest on this, you're paying principal and interest. And typically the benchmark used for that is the treasury, whether it be if it's a 5-year note, let's say we're doing a 5-year note to pay this piece of equipment, we'll use the 5-year treasury benchmark plus a spread. If it's a 10-year note, the 10-year treasury benchmark. So that could also fluctuate, and typically you'll get your rate, you'll have your approval for your loan. The rate is typically determined, a couple of days before, because since the treasury, all these benchmarks fluctuate, is usually locked in at that point. And the last point, you could lock in your rate, which we'll get into further discussion. You could always lock in your rate for a cost or a premium with your bank if you feel is necessary. But again, you just know that there's sensitivity if the rate changes. Rate can go down, right? I had a situation recently, a client, they're purchasing a property. They wanted to lock in the rate back in October. We were at about 7.42%. Rates dropped now. Now hey, can I get out of the rate lock? We're like, hey, listen, the bank, we pretty much pay that money up front to lock in that money. So we pretty much advance the money to lock in that rate. So the only way to get out of that rate is to terminate it and pay a fee. So there are situations you could lock it, but you have to be aware of what's going on in the market. I'm not an economist. I can't say what's going to happen 6 months or a year from now, but from the trends, it seems like we are heading downwards. How much, we don't know. But I will say at the end of the day, but to Fernando's point, you want to be cognizant of rates. But what I'm seeing is that businesses at the end of the day are going to borrow money, right? You have to grow your business. You have to buy equipment. You need working capital to survive. So what I've seen throughout the years, through up markets and down markets, businesses still borrow. Do things slow down? Absolutely. But at the end of the day, you're going to borrow. You want to make sure you sustain your business. And any interest you pay is tax deductible. So I'll kind of leave it at that. I know I spoke a lot, but a lot to say there.
No, that's awesome. But you guys have both mentioned spread. So there's always going to be a base rate, and then there's a spread. The spread is always based on the risk that the overall loan package or business brings to the bank. Is that spread, and this is a question now for either one of you guys can jump in. Is that spread being affected by industry? Because from my perspective, when I was looking at helping businesses prepare loans, if it was right after the pandemic, and if it was a certain industry, for example, the restaurant industry, most banks said, oh, wait, that's a little bit too risky, and the amount of risk is always going to be balanced out by the amount of spread. Are there industries that you guys are noticing that are going to have a little bit tougher time accessing capital, or have been looked at a little bit more with a watchful eye than other industries? So,
Sure. So the answer is Yes. I mean,
Yeah,
the way
yep.
the way it works, again, for most lenders is um, it's called risk-based pricing, right?
Hmm.
So depending on who the lender is, let me back up. There's always money available for
Hmm.
just about anybody,
Correct.
but at a price, right? So the stronger the borrower, the stronger the project, the stronger the industry, there's more people willing to. So it really comes down to supply demand.
Hmm.
So there's more lenders that are interested in doing that loan, that's going to drive the price down, right? If it's a business, let me give you an example. This might make it easier. So if you're a startup in the restaurant industry, and I'm the lender, right? And my portfolio is loaded with restaurants. Okay, this is what's going to happen. And I'm going to pull the curtain up a little bit. I really don't want to do that deal. What I might do, not me, but a lender, what a lender might do is say, you know what? Yeah, we'll do that deal. It's going to be, you know, if their going rate is 10%, we'll do it at 12 or 30. We'll overprice it because it's not a deal that we really want. So, like everything else in life or in business, a lot of it is supply and demand. Nobody says, I don't like that industry because of the industry. Now, there are certain industries in the SBA world, for example, right? There are industries that we cannot lend into. Okay. It's a hard line that if you are in the adult entertainment industry, we are forbidden to lend into that world. We
Hmm.
cannot lend into the cannabis world because it's federally illegal still. We cannot lend into, let's say that, excuse me 1 second. That should not be ringing. Is it me?
So yeah, Fernando was answering the question exactly how I was hoping he would answer it, because there is going to be an element of the industry itself that might be looked at in isolation. But it's also very important to understand what the individual bank that you're working with has a particular appetite for now, or might be full, and they might have overlent in a particular industry just because the general landscape, or is very trending in that environment, or is very weak or very strong in that environment. So understanding what they have, limitations on. So they might love your industry, but for right now, they're pretty much tapped out, and all of their risk is overexposed in commercial real estate as an example. And commercial real estate is pretty much something that most banks like because it's pretty universal, depending on the type of real estate, especially if there is a alternative use of it. Most banks like it because it's a high liquidation. But if I overlent in that industry, and I'm overexposed in that industry, as the lender, I'm not super motivated to continue to lend in that industry because it just doesn't make risk sense for the bank. So having the conversation and that relationship with the lender, I think, is going to be very important going forward into 2024 more than the past.
And real specifically, and then I'll let Carlos jump in. Real
Okay.
specifically for an economic development corporation such as ours, okay, if you're creating jobs,
Hmm.
okay, if you are running a local business where the money's going to stay in the town, in the county, if it's going to be, we only do owner occupied real estate. So
Hmm.
we're not in, if you want to borrow money to speculate in real estate, we don't do flips. We don't lend
Hmm.
to investors. If you want to borrow money to invest in Bitcoin, that's not us. If you have a speculative business, that's just not what we do. We'll be a lot more flexible with a business that has a component of economic development, just like it's in our name. We'll be a lot more flexible if that money's going to stay in town. The last thing that I'll add, and then I'll stop, is, not too long ago, I had a company out of Hudson County, pretty solid company. But once I got talking to them, it was literally two guys that owned the company here in the States, and they were looking to borrow money to add people, payroll. Once we got talking, and I found out that all the jobs being added were going to be overseas, we lost appetite for that because that money was not staying in the local economy. Now, you can argue that, well, they're going to, there's some tax benefit, but we want to see that money stay local and rotate through the local economy. Now, that's because that's our mission, right? So we are a mission-driven lender.
Mm-hmm. Perfectly said. I also want to take a step back real quickly and kind of just address the overall approach that a bank has to looking at the risk of a loan package. And anybody who's seen me before in these type of chats knows that I like to address the 5 C's of lending. And depending on the textbook that you're using or the website you're going to, there's a slight different variation of how to put this logic together. But generally speaking, the 5 C's of lending are your credit, the compensation, the collateral, the character, and the conditions. And what that really much means is, what's the credit score or the paying behavior of the people who are in a position of ownership of the companies. And usually we'll look at people who own at least 10% of the company or greater. We'll take a look at what their credit scores are or what their paying behavior has been over the past, and most of the focus is on the last 24 months or so, but they look at the overall payment history. Want to make sure that you have the experience to handle this type of payment facility, whatever that payment facility happens to look like. The compensation is show me that there's cash flow that can meet the minimum payment requirements. If I'm going to have a payment at the end of the month of $1,000, show me that you have free positive cash flow to make the $1,000 payment and have a little bit of a buffer room just in case something happens. So we look at certain ratios to make sure that that's in place. Collateral, what kind of guarantees do I have that you can pay this back? And if not, is there something you can liquidate to be able to pay back the lender? Because the lender ultimately is taking the majority of this risk. Typically, you're going to have an equity injection of 10, 20%, depending on what type of loan or financing we're looking for, but the bank's taking the majority of the risk, 80%, 90% of it. So they want to make sure that in case something happens, what kind of liquidation position do you have? The other one's going to be the credit compensation collateral. Those are the first 3. The last 2 and those first 3 are very universal for almost any type of loan. The last 2 are very specific in the world of business, which is your character. Who are you and why are you a good fit for the business? Give me a little bit of background about your business. A lot of us, and I know there's a couple questions here about startup businesses that we'll go into the Q&A in a little bit. But show me that you have relevant experience to be at the head or the helm of this business. Do you have experience directly in that industry? Do you have experience already with the business? And the last one is something that I really want to focus on for or kind of is the heart of what today's conversation is, which is the conditions. What's happening in the world around us? What's good and how are we taking advantage of it? And what's bad and how are we preparing, to kind of circumnavigate around whatever that obstacle happens to be. I know that there's things that we haven't spoken about yet at a macroeconomic level. What's happening in the world. Sometimes it's geopolitical. If I was talking to Fernando about this, the other day, and if I sell coffee, and where I'm sourcing my coffee from, has some political tensions or have some added tariffs, that I can't control. What kind of contingency plans do I have in place? What kind of thoughts have I put down into my business plan to make sure that if this does happen, does it stop my business from continuing to go forward? Do I have an alternate supplier? Do I have insurances in place or bonds in place, to make sure that I can continue doing my business and continue paying the bills and stuff like that, So with that in mind, I know, Fernando, you did mention before inflation. So as a person in the leadership of role of my business, I should be aware of certain indicators that might have an effect on me. This time we'll start off with Carlos. So Carlos, is there a macroeconomic indicator that you feel is important and as general statements? I know every business has something very unique, but is there a macroeconomic indicator that you feel that in addition to interest rates, most businesses should be aware of? Something that's, it might be inflation or it might be something else. Is there something that you advise your clients to be mindful of?
Sure, sure. And that's a great question. And I think, obviously key indicator is rates, borrowing, right? But more on a macroeconomic level, everything that goes on right on a daily basis, right? Whether it's nationally or internationally, our businesses are impacted more so than I think individuals, right?
Mhm.
Business owners, they have to support themselves, and they're sometimes supporting thousands, hundreds of employees, right? So it's very important, right? And it is something, to stay up to date with current events. We have tax tariffs, right? What is the cost of your goods coming in from a different country, right? That's going to directly impact your cost of business, right? Your cost of goods sold is going to directly impact your profit margins. We looked at COVID a couple of years ago. To ship in a container of goods from China, let's say, was 10,000 before the pandemic. Cost went up to 40,000, right? So it really depends on the industry, but obviously inflation is a key indicator keep an eye on, foreign policy, foreign, tax tariffs. And I think now going into the new year, the 2024 election, right? A lot of things change, right?
That's huge.
And we do see things where there's a lot of anticipation. And from my experience looking at the previous elections, there's typically like a pause, right? Discussing the rate environment before. Could it continue to go down drastically? We don't know. I think is maybe going to go down a bit. Are we going to get into the threes, fours? I doubt that, but that's my opinion. But supply chain as well, right? Everyone's paying more for goods, right? Your supply is paying more for goods, so you're going to have to pay more for goods, and therefore your cost of goods sold are going to go up. And most business owners are going to charge that to their client, right?
Yeah.
All of us here go to restaurants, we're shopping at the grocery store, we're buying from Macy's. We all know costs went up, right? Inflation. So having a keen and an understanding of those factors on a macroeconomic level will definitely, I think is imperative for a business owner to be aware of those things. And you kind of have to always adjust, right? Same way you have to adjust each year with your business financing plans, with your marketing plans, you got to adjust and take into account the macroeconomic situations and how you're going to implement them to your business, how it could change your business and affect the business ultimately. So those are some key factors I would think are, definitely imperative to stay on top of.
And Fernando, so same question, but if you can give me a quick answer, just because I want to make sure we have time for
Sure.
Q&A.
Two things. So if you are in the consumer space, if you sell business to consumer, just take a look at consumer spend. That's a number that gets kicked out every month, and it shows you how much consumers are spending, right? So if I sell sticking to coffee, okay, if consumers are spending, my business should do should continue to do as well. If that consumer spend starts dropping, then I got to be aware of that. If I'm in the industrial space, right, there's a number that comes out every month that talks about factory orders, okay? And that's for anything that falls on your foot and it hurts, but that's factory orders, right? So if you're business to business, keep an eye on that. If you're business to consumer, keep an eye on the consumer spend. Again, big macro, but it's at least, if you're navigating a night and you got to look at the stars, those are a couple stars to look at.
Awesome. So I definitely appreciate that. Now I want to just jump into a couple of questions that we have here. So we have a question here. I operate a small car rental business for the past 2 years, and I'm having trouble finding funding to purchase vehicles to expand my business. Is there something we may be able to qualify for? So I'll chime in real quickly, and I'll let Carlos and Fernando chime in. So the question still has a lot of gray space, where I don't have enough information. There's a lot of areas here that can say, you know, why don't we have access to funding? Could it be a cash flow issue? I know that generally the used car space does come with a little bit of challenge, but like Fernando mentioned it before, there is always access to capital. And all businesses, have the ability to walk into, well, I can't say all businesses, but you know what, yeah, all businesses. It just depends on making sure we talk to the right lender. So SBA, like Fernando mentioned, can't do cannabis, but there might be a local regional bank that might be able to. So for the most part, there are products and there are lines of credits and specialty loan programs that are designed just for the car industry that we might be able to talk to them and connect you guys with. But I think there is a need for having a better conversation with, somebody like Fernando or Carlos or myself to get a complete picture to then say, these are some of the options. To me, the quick little easy example is saying, hey, doctor, I have a cough. What kind of medicine can you give me? Well, just because you have a cough doesn't mean that it's going to be just this one medication. Why do you have a cough in the first place? So if you're finding trouble getting access to capital, let's have a conversation to do a proper diagnosis of the business, a proper assessment, and then we can start to match, be that good matchmaker. Carlos, Fernando, are there products that you guys have? Actually, no, Carlos, you just did a car dealership recently.
Sure,
Yeah,
sure,
yeah.
yeah.
So it's a great little layup for you, yeah.
Yeah, absolutely. And I think you made a good point. It's obviously sitting down with your banker, and having a conversation, right? And especially this time of year, beginning of the year, talking about your goals and aspirations. But we would definitely want to get an understanding of your previous history with the business, current, and what's your future plans, and make that assessment. See what the pain point is. Is it working capital? Is it having a large enough space? Whatever it may be. Is it, hey, we have to fix your credit to make you lendable to the banks, right, or to our any lender out there. I would say, as Ryan mentioned, I just closed a loan for a used car dealership. It was, however, collateralized by real estate, so that did help. And to Fernando's point before, on a risk adverse perspective of it, since we have the collateral that it is real estate, our pricing was a little different, and we looked at that transaction more favorably. However, in your situation, let's say you're looking for working capital, there are various tools that you could utilize, whether it be a working capital line of credit. A lot of banks do offer, we offer a unsecured line of credit. The pricing may be a little higher, but we do offer some vehicles you could use to leverage for working capital. I do know a lot of dealerships, and I'm not sure if this particular individual has access to floor planning. I'm not too sure what size dealership you have to be to get the type of financing, but we do have contacts with companies that could help you with floor planning to purchase inventory. That's the number one way I see most dealerships finance their inventory. But in addition to that, you could have that working capital. What I will say, however, for anyone that has a business, whether it be the used car industry or any industry, you want to start off by having some credit established. And believe it or not, even having a business credit card is a great way to start, right? You're building credit for your business, especially if you have it for a couple of years. You use it, you pay it, you're establishing credit. I'm not sure if it was Ryan or Fernando who mentioned it, but in addition to the credit score, which is great, that's a benchmark we use to determine, all right, this is a good range. What's in the credit is even more important, right? So if you want to apply for a line of credit down the road, and the bank sees you have no experience managing a line of credit, whether it be a credit card or a working capital line of credit, that decision is going to be a little different, right? But if you start early, develop a business credit card. Banks even offer secured business credit cards. So you could put 1,000 down, we'll give you a card for 1,000. So immediately you're establishing credit and you grow from there. You can grow relatively quick. You have the card for 6 months, you increase it, a year later, you're applying for lines of credits. But long story short, we do offer solutions for working capital. I'd love to have a discussion. And if not, we have other partners that could assist in various ways. Yeah.
Awesome. And I appreciate it. So both Carlos and Fernando, there are questions here about how can I get in touch with both of you guys. So make sure you guys put your contact information into the chat, because I'm getting a couple questions of how do we get in touch with you guys. So this next question I'll just give to Fernando, because I know that we worked on something similar recently. The question is, I would like to start up a owner operator trucking company. And I know Carlos, Fernando, we worked on a truck recently. How can I source funding to purchase equipment if I'm currently unemployed? Give me, I guess, a quick little teaser answer, and then have them contact you later on.
Sure. So startups, the first thing that you need to do before you even start looking for financing is to get together with your SBDC counselor, local office, meet with them, get a business plan, and get projections in place. We would look at a startup business. However, we do look for industry experience. So if you've been a corporate warrior for the last 10 years that now wants to become a truck driver, it's probably not going to happen. I'm not going to lie to you. On the other hand, if you've been working in the industry for somebody else, we would certainly entertain that. And a lot of it is going to be based on the business plan, the projections, and then your personal character and all the 5 C's that Ryan talked about. But that would be a starting.
Yep. So
I don't know if that answers the question, Ryan. I don't want to get too much into it because I want to be respectful of everybody's time.
No, I appreciate it. Yeah, we're gonna try and wrap up in the next 3 minutes. Just to make sure that we have enough time to go over go over these. And I'm trying to combine some of these questions into I guess overarching themes.
Can you make sure that they know how to register with SBDC maybe?
Oh yeah, definitely. So we'll go over that in the closing statements and make sure that you find your local office, work with your local consultant to make sure that that we start off with the best foot forward in order to get you ready to have a conversation with Carlos or Fernando or any lender or any bank that you have in your region. So a lot of these questions are themed around I'm starting a business. So I have here, home health agency. There's another one here that was for I just registered a hair retailer, alopecia, cancer, domestic violence, clients, and a lot of these are best answered by what Fernando just said. To make sure that we have a plan in place, a business plan and a projection, and very important to remember that business plan and that financial plan tells the same story. One tells it with numbers, the other one tells it with letters, but it has to be based in facts. So we have to make sure that we tie it back to as much quality source of data as possible, so that we can say these are realistic expectations based on industry trends, based on certain economic reports. And that's where the value comes in with working with somebody who has experience building these business plans and building these pro formas to make sure that that whatever we're saying is going to happen has a high likelihood of happening, and that there is a plan, a very methodical plan to get there. Oftentimes I'll see reports that say I'm going to make $1 million in my first year, but there's no systematic plan that says this is how I'm going to get to $1 million. Is it possible? Absolutely. But make sure that we have a marketing plan and a budget as an example, and costs associated to support each, that says this is how I'm sourcing my clients and this is how I'm going to grow to get there. So most of these questions could be answered by by that overarching answer. Let's see.
Real quick, make sure that if you meet with a counselor, that you have a clear understanding of the utilization of funds.
Oh, very important. Yes.
If you come in and say, I need working capital for a startup, and you cannot explain to me as a lender how you're going to utilize the money, the answer is probably not going to be what you're looking for.
Yep. There's one question here that I saw also earlier, is about international businesses. How likely is it that a lender will lend to an international business? Anybody want to grab that?
Ryan, I guess the question is, are doing business internationally or are located or headquarters internationally. I'll
Exactly.
say, I
Exactly.
guess I'll answer both. But if you're doing business internationally, we could absolutely assist you. One thing we come across, especially with clients, specifically when it's working capital, you want a line of credit. For lines of credits, if it's not unsecured, what a bank will typically take is your accounts receivables, right? Your anticipated money coming in as collateral. Typically, they'll borrow anywhere from 70 to 80%. If you are a US based business doing business internationally, we do have some vehicles and a group that could handle international receivables, right? Which is great. So typically a bank will not take international receivables, only domestic, but we do have solutions that could assist that way. And we do have the capacity, as most banks, to offer treasury services to help you bank on that perspective. Now, if it's a international based business, unless it's an institutional client, a very large company like Apple, McDonald's, whatever it may be, that's going to be tough on our side. But if you are based in the U.S. doing business internationally, we could still assist you.
I appreciate that.
And we would only consider a New Jersey-based company and owner-occupied real estate. So if you wanted to buy a warehouse, if you wanted to set up an office, and you were going to employ New Jersey people, then we would be looking at it. Otherwise, it probably would not fit what we do.
Yeah. So I feel like we only scratched the surface of things to talk about, but we have to kind of wrap it up. I know Rebecca just asked a question at the end about medical practices, and yes, I actually have a lot of experience dealing with medical businesses. There are specialty lenders that dedicate all of their resources and funding just for medical practices. It is a very unique because of the billing cycle. So definitely reach out to us and we can kind of do a deeper dive into that. The lender always has to have an understanding of your payment cycles, of your industry, in order for them to be able to lend into your industry. But with that said, Uzma, are you still with us? I'm not sure.
Yeah, still here.
Perfect. All right. So I know I went overboard by 2 or 3 minutes, but we still have about a minute or two before we wrap up. So how do you want to wrap things up? Do we just invite everybody to register with the SBDC?
Yes.
All
Yes,
right.
completely okay. Invite everybody to register. Have we answered all of our Q&A, our questions?
Not to the degree that I would like to, because we know time limitations, and I want to be respectful of everybody's time,
Right.
But that leads us, into motivation to follow up with the conversation again with Carlos, Fernando, or myself.
Yes, absolutely. So let me share my screen. Well, first of all, before I do that, I want to be respectful of Carlos and Fernando's time. So thank you both for doing this for us. And Ryan, of course, you as well. Fernando and Carlos, we appreciate it. And we would, certainly welcome you to do another webinar with us whenever, you want, whenever you're available, whenever, just let us know and we'll just okay, come on. Like, let's do another webinar. So thank you so much for that. Let me just share my screen. All right, so this is our website. What we always talk about, njsbdc.com. This is where you go for all your needs. We, not to brag, but humble brag, I think our website is a great resource. It's if you just take 5 to 10 minutes of your time and you just scroll and you look at different pages and you go through the counseling page and events and resources and data, I think it's a great resource and you can find out a lot of information. So if you'd like to request counseling, all you have to do is go to njsbdc.com. The first thing that you'll see that pops up on the page is request counseling with the red hot button. You put in your email, you put in your county that you're from in New Jersey, and you can request counseling. And what that will do is take you to another page for you to fill out an application of some sort. If you'd like to request general counseling, because this is not the only topic that we can counsel you for, please just just share what your needs are. If you are requesting counseling specific to this webinar, then I would ask that please go to that application and say, you know, I attended this webinar with Ryan and Fernando and Carlos, and I would like to speak to them, or I would like to speak to Ryan and he can get you connected. Excuse me, then you can do that. One more thing that I would like to share is how you can, besides counseling, one of our main resources are events, training and events. So when you go to events, you go to webinars, this is the page that you go to. I highly recommend that you do sign up for our newsletters. And this is where you will see all our webinars from beginning of time to right now on all sorts of topics. Whether, you know, here's one with Ryan on how to get funding for a small business, to SBIR, excuse me, to marketing, to HR, to cybersecurity, all of that. We have those, and those are just webinars that have been recorded. But we also have statewide events and workshops that happen, and they can be in person or they can also be a webinar live. Some you do have to pay a fee, and most of them are free. All right, so with that, we're wrapping up here. I'm wrapping up here on my end. NJSBDC, we appreciate your support. Our upcoming webinar is next Tuesday on the 9th, and that is Navigating Business Registration with Vanessa Schwartz. We've been doing this since last year, basically since November. And if you or a friend, if you are attending this webinar, you are already in business. But if you have a friend or family members or friends who would like to register their business, then please refer them to this webinar. NJSBDC has helped 15,000 plus small businesses grow. No cost small business consulting, training and events starting at $0, just like this one that you've attended, exclusive small business resources. We hope to see you at our next webinar. Stick around and we hope to help you grow. All right, take care and have a wonderful rest of your day and week.
Thank you, guys.
Bye, everyone.
Thanks, everyone. Again, special thanks to Carlos and Fernando. Very appreciative of you guys joining us today.